investors, and welcome to the Stock Sense Morning Brief. I'm Malik, and it's Wednesday, December 3rd, 2025. After a powerful rally, the KSE-100 index took a slight breather yesterday, Tuesday, December 2nd. Let's dive into what moved the Pakistan Stock Exchange and what you need to watch out for today. The KSE-100 index closed down by 420 points yesterday, settling at 167,642, a modest dip of 0.25%. This followed Monday's strong performance, where the index had surged by over 1,385 points, or 0.83%, to close at 168,062, so a minor correction after some significant gains. Market participation remained robust, with over 775.5 million shares changing hands, and a total traded value nearing 37.5 billion rupees. Looking at the broader market, decliners outnumbered advancers, with 254 stocks losing ground, 182 gaining, and 43 remaining unchanged. Diving into sector performance, the automotive assembler sector exerted a notable negative influence, pulling the index down. Similarly, oil and gas exploration companies also contributed negatively to the overall market. On the flip side, the cement sector provided some positive momentum, helping to offset some of the day's losses. Turning to the technical charts, the KSE-100 appears to maintain a largely bullish sentiment. Most of the short to long-term moving averages are still signaling a buy action, indicating underlying strength. However, the Hull moving average for a 9 period suggests some very short-term selling pressure. When we look at the classic pivot points, the main pivot level stands at around 163,630. Immediate support can be found at approximately 160,250, while resistance is seen around the 170,050 mark. Shifting gears to corporate announcements, investors should note a couple of key board meetings scheduled for today, December 3rd. First, IBL Modaraba will be meeting to consider their annual accounts for the year ended June 30th, 2025. Also, Pakistan Services Limited has a board meeting to discuss matters other than financial results. We'll be keeping an eye on any announcements from these meetings. As for last day entitlement for distributions, our data indicates there are no specific companies for which today is the final day to be eligible for announced dividends or bonuses. Beyond the daily trades, let's look at the broader economic picture and market news, which presents a mix of positive developments and emerging headwinds. On the positive side, investor confidence remains strong, with the KSE-100 recently pushing past the 168,000 mark. This optimism is fueled by institutional buying, expectations of circular debt resolution, and easing inflation. In a significant boost for economic activity, credit to the private sector has hit a 3-year high, indicating increased business demand, a very good sign for the banking sector. The government is also moving forward with privatization plans, including key entities like SINDAC, PMDC, and NICL, signaling a commitment to reforms and creating potential investment opportunities. Furthermore, the withdrawal of the development surcharge on exports is a welcome relief for export-oriented industries, aiming to boost Pakistan's foreign exchange earnings. Perhaps most importantly, consumer price index inflation cooled down significantly to 6.1% in November. This easing inflation could potentially give the State Bank of Pakistan room to consider interest rate cuts in the future, which would stimulate broader economic activity. And in good news for the agriculture sector, a major grain market in Sindh has reopened after stakeholders resolved paddy-related issues, ensuring smoother trading. However, we also face some headwinds. Oil sales plunged in November, which points to a slowdown in industrial activity, transportation, and power generation, directly impacting oil marketing companies and refineries. There are also concerns about gas sales projections, highlighting potential challenges in the energy sector that could affect industrial output. Adding to inflationary pressures for households and industries, LPG prices have been raised by 4%. The IMF's recent report stressing the need for governance and reforms remains a neutral but critical factor, as adherence to these conditions is vital for Pakistan's ongoing economic stability and future bailout programs. Finally, let's track the smart money with yesterday's institutional flows. Foreign institutions were net sellers, offloading stocks worth about $1.7 million. In contrast, local institutions were net buyers, injecting roughly $1.7 million into the market, largely offsetting the foreign selling. Diving deeper into local flows, mutual funds were significant net buyers, adding about $3.5 million. Insurance companies also showed net buying of around $2 million, and banks were net buyers of nearly $1 million. On the selling side, individuals were net sellers of about $2.4 million, followed by companies selling approximately $1.4 million, and foreign corporates also offloaded around $1.2 million. So we saw strong domestic institutional support providing a crucial counterbalance yesterday. Malik's take. The KSE-100 slight retraction yesterday, after a strong upward run, is a classic case of profit-taking in a market grappling with mixed signals. On one hand, the macroeconomic landscape is increasingly positive. Cooling inflation at 6.1% in November is a significant development, especially with the Monetary Policy Committee meeting scheduled for December 15th. This opens the door for potential interest rate cuts, which would be a major catalyst for economic growth and market sentiment. Coupled with robust private sector credit growth, promising privatization efforts, and relief for exporters, the underlying economic narrative is strong. However, sector-specific challenges, particularly in the energy sector with declining oil sales and uncertain gas projections, are creating pockets of concern. The resilience shown by local institutional buying, especially from mutual funds and insurance companies, is a powerful vote of confidence in the domestic market's long-term prospects, effectively absorbing foreign and individual selling pressure. This environment calls for a nuanced approach. Investors should look beyond the daily fluctuations and focus on companies with strong fundamentals that are poised to benefit from easing inflation and enhanced private sector activity. While the energy sector faces headwinds, other areas, particularly those benefiting from government reforms and export incentives, could present compelling opportunities. Maintain vigilance, but recognize the improving macro backdrop that could underpin future market advances. That's all for today's Stock Sense Morning Brief. Thank you for tuning in. Remember to subscribe to our YouTube channel and podcast for your daily market updates. Until next time, invest wisely and have a profitable day.